Good afternoon, everyone, and good morning, depending on where you are. Thank you for joining CILTNA in our current webinar on budgets, tariffs, and infrastructure, your Canadian business adventure. I'm very pleased today to be joined by two guest speakers. We have Cathy Campbell, Executive Advisor for Responsible Distribution Canada. And we have Al Dewar, Executive Vice President from GHY International. So I'm going to share my screen. Give me a second. There we go. So quickly before we get started, for those of you who may not be familiar with the Chartered Institute of Logistics and Transport in North America, otherwise known as CILTNA, it's a not-for-profit trade organization that focuses on people getting involved. Anybody who's involved with the movement of goods and people and their associated supply chains is more than welcome to join CILTNA. There's all kinds of information available. You will get a copy of these slides after the webcast, and you'll be able to just either contact our administrator at the email that you see there or scan the QR code to get more information on CILTNA if you're not familiar with it. As I said earlier, I've got two guest speakers with me today. Quickly, I am Joy Nott. I'm a partner at Trade and Customs at KPMG in Canada. I'm also CILTNA's leader for the GTA and Hamilton, Greater Toronto Area and Hamilton area districts. So anyone in those districts that is a member of CILTNA, I'd love to hear from you and get ideas from you on what we can be doing next for the association. And I'm joined today by Cathy Campbell. Cathy has over 30 years experience in association management, and she's currently volunteering on two boards for Supply Chain and Rotary. She's semi-retired, but she continues to advise and coach others in the industry. And currently she's actively involved in advocating on behalf of the chemical industry in Canada. And also we have Al Dewar. Al is Executive Vice President at GHY International. When it comes to importing, it's in Al's blood. For those of you who don't follow Al on LinkedIn, I would strongly suggest you look him up on LinkedIn and start to follow Al on LinkedIn. He's always posting really good content about things that are happening at the border. So Al is well practices in the area and is really an expert in things, everything from trusted trader programs to customs audits and that sort of thing. Professionally, he's the Executive Vice President at George H. Young International, which was founded in 1901. It's one of Canada's oldest customs brokerage firms in Canada. And personally, his story is one of international adoption, where Al really believes in both his work and his family life, that the world is a small place and that everyone should be treated with respect and care. So with that, really quickly, I'm not going to go through this slide in any great detail. Caveat, these slides and the rates that you see on these slides could be out of date at any time. So please only refer to these slides as general reference. Don't use this as the absolute source for actual tariff rates on any given day, because things can change. But what I want to draw your attention to on this slide, more so than the individual tariffs that apply to different commodities, are the two navy blue bands. Not all tariffs are created equal. In the United States, there are two types of tariffs. Industry-based tariffs, known as Section 232 or 301 tariffs, which are on the bottom band, and IEEPA tariffs, which IEEPA stands for the International Emergency Economic Powers Act. Those tariffs apply to countries. The legislation behind these two different kinds of tariffs is very different. Section 232 and Section 301 tariffs have been around for decades. They've been used in the past. There's nothing to be questioned at all about the legality of Section 232 or Section 301 tariffs. They've been around for decades. And the fact that they're being used today is not unusual. What is unusual potentially is the rates. The IEEPA tariffs, however, on the top line, They're actually being challenged in court. So there's a court case that's working its way through the various levels of court cases in the United States, of courts in the United States. It started back in May, where a company brought the US administration to court stating that there's nothing in the IEPA legislation that allows a president to tax, because ultimately a tariff is a tax. So that case was brought to the Court of International Trade in May. That court found that indeed there is nothing in that legislation that gives the power of taxing to the president. And that court ruled that the IEPA tariffs were illegal. That was then immediately appealed by the US administration to the Federal Appeals Court in Washington, D.C., where that court also found that the tariffs are illegal and that there's nothing in IEPA that gives the president the power to tax. That was then immediately appealed to the US Supreme Court. Oral arguments were heard on November 5th, 2025. We don't know when a ruling is going to come down from the Supreme Court. However, what we do know is that it's a fast-tracked case. So we could see something early in 2026, January maybe February. It has to be, the decision has to be rendered and published before July, which is when the court adjourns at the end of this session. And something else that happened that relatively recently, on November 28th, Costco, it's a matter of public record, so I can say their name. Costco brought a lawsuit on top of what I just finished telling you, the lawsuits challenging whether IEPA tariffs are legal, to protect their ability, theirs and everybody else's ability, to be able to claim back the IEPA tariffs in the event the Supreme Court rules that they've been deemed illegal. It may seem counterintuitive to think, well, if they're illegal, wouldn't automatically they have to be paid back? And the answer to that is yes, but there's a time window around it. And I don't want to get into a lot of detail, but I'll just say, 314 days. It's a special number. After that happens, the entry, which is where you pay your duties and taxes, goes into a specific status called liquidated. And there's some thinking in the United States that once a file liquidates for the IEPA tariffs, that it would no longer be eligible to be claimed back for a whole bunch of technical legal reasons, which I won't get into. The Costco filing, that court case, is basically saying that if the Supreme Court rules the IEPA tariffs are illegal, everybody should be able to get 100% of their IEPA tariffs that they paid back. That court case, as far as I know, as of today, has not rendered a ruling. So now enough with the United States, and let's look at what's happening here in Canada. So on the far right-hand side of the screen, the light blue square that you see, that was a list that was in effect. It was referred to in Canada as List 1, and it had about 1,400 goods on it. It was everything from orange juice to porcelain toilets and bathtubs and Tennessee whiskey and a whole bunch of things that Canada put retaliatory tariffs against the United States on. That list was repealed effective September 1st, so those tariffs are no longer being charged. The tariffs that are being charged are against against the United States and China. For a lot of people, they don't realize, I think, that Canada is also charging tariffs against Chinese goods, specifically electric vehicles, at a rate of 100%. That matches the US rate of duty that they're charging on electric vehicles. And then steel and aluminum at 25%, and the slide needs to be updated. It needs to say 25 or 50%, depending on where the steel is coming from, whether it's a free trade country, not a free trade country, etc. I'm not going to get into details there, but I wanted to draw your attention to the bottom where it's highlighted. There's a remission relieving tariffs on certain steel and aluminum coming into Canada. It was postponed. It was supposed to be that remission, meaning the relief on those tariffs, were supposed to end on December 15th. It's been extended now, depending on what kind of steel and what kind of aluminum. There's all kinds of caveats. It's either ending on January 31st or June 30th. What's important to know is that if you've brought steel and aluminum into the country, into Canada, for specific reasons, it's possible for you to potentially get your money back. And you've got a 2-year window in which to do that, 2 years from the date the goods came into the country. That and the fact that the Canadian government is still taking company-specific applications. So if companies feel that they should not or cannot pay the tariffs because of extenuating circumstances, for example, they're contractually obligated to buy certain steel and aluminum that attracts tariffs. If you've got a compelling story, the Department of Finance in Canada is willing to listen to that story and potentially grant your company specific relief on paying the surtaxes. That application process started in March. It's still open and it's still taking applications. Really quickly, I'm not going to go through this in any kind of detail. The takeaway from this slide is to know that there are different kinds of programs in Canada offering Canadian companies relief to tariffs. There's everything from funding to relief programs like I was just talking about, remission programs, to actual, bundles of money that companies can apply for different kinds of relief. I won't go through this in any kind of detail. You'll get these slides after the presentation. And if anyone has any questions about the various programs, these are not all the programs that I've listed on the screen. These are just the ones that are most commonly tapped into, but there are other programs. If you've got questions about that, please reach out to me. I'd be happy to answer your questions. Now, the Canadian federal budget. So 2025 is certainly a different federal budget than Canada has seen in recent years. If you listened to Canadian politicians prior to the budget being released, there was a lot of aspirational language. We heard phrases like, we are going to make generational investments. We are going to, that this budget is going to change Canada fundamentally today and for generations to come. There was all kinds of really positive language talking about how Canada needed to pivot and how certain fundamental things in Canada needed to change. One of the things that changed in this latest federal budget is the actual format of the budget. If you look at the right-hand side of the screen, it's an actual snapshot taken out of the budget where it's a chart that shows the deficit. So overall, this budget is saying that Canada is going to, after the government finishes deploying everything that's in the budget, Canada will have a $78 billion deficit in 2025, and that's set to decline down to 57 billion in 2028-29. But what's different about this budget is that graph on the right-hand side. For the first time, the Canadian government is showing how much of the deficit they're going to spend on the government day-to-day activities that the government does to function on behalf of Canadian citizens, and then how much we're investing in capital investments for future generations. So it's the first time that the numbers have been shown this way. So I thought that was important to call out and for people to pay attention. So when money is being spent, not all deficits are a negative thing. Think about when you take a mortgage out on a house. That's not a negative thing. You're actually investing in your future, and that mortgage on your house, once it's paid, that the value of your house then becomes generational wealth. If you think of it that way, those are the kinds of capital investments that as Canadians we should be keeping our eyes on. The budget overall was divided into 5 chapters. I specifically pay attention to chapter 2 and then even more specifically to chapter 2.2 because that's where it's talking about Canada's shifting from reliance to resilience and growing Canada's trade with the world. So overall, through the budget, the Canadian government is looking at spending $280 billion over 5 years. And that $280 billion breaks up in the numbers that you see along the right-hand side. So $25 billion for housing, defense, infrastructure, and productivity and competitiveness. But that $280 billion, upper right-hand corner, is going to be broken down even further if you take a look. Sorry, the $115 billion, that's for infrastructure. If you look at the left-hand side as it breaks down, you'll actually see how those numbers break down. And the investment is meant to enable growth by $1 trillion for the Canadian economy. So something else that's relatively new, a lot of these large infrastructure projects the Canadian government is talking about, which will help trade, are going to be supported by Canada's Infrastructure Bank. And the Canadian government is raising the amount of money that the Canadian Infrastructure Bank has in their capital envelope from $35 billion to $45 billion. Now, I said earlier, I focus personally on Chapter 2.2 within the budget, which talks about how Canada is going to grow its trade internationally. That portion of the budget, that 2.2, is broken down into three main pieces: new trade infrastructure, growing and diversifying Canadian trade, and connecting Canadian businesses to global markets. I'm not going to go through the bullet points on that surround these three circles. My comment here is that in all my years of looking at Canadian federal budgets, which is a lot of years, 2025 is my 40th year doing trade and customs. I've looked at a lot of budgets in my life. Normally, international trade gets somewhere between 1 and 3 bullet points in an entire budget. This budget has, I can't remember what's the count here, 3, 6, 8, 10. There's 10 bullet points. So as I was reading through this particular Canadian budget, it became obvious that there was a real focus on Canada's trade with the world and everything from building infrastructure to opening up programs to help Canadian exporters diversify their markets. This is a map of Canada that at a very high level shows you what the 13 major infrastructure projects have been selected so far that are being invested in. And from a CILTNA perspective, for those of us who are into the movement of people or goods, I'd just like to draw your attention to a few of them. At the bottom left hand, you'll see Alto high-speed rail. That's talking about putting a high-speed rail system in initially between Ontario and Quebec along the Windsor-Quebec City corridor. You also see the Port of Churchill Plus. That's looking at expanding the Port of Churchill and adding additional piers. There's also in another provision of the budget talking about building year-round roads to get to certain parts of Hudson's Bay. The roads can be used for both civilian purposes, meaning international trade, as well as military purposes. And then the other one is Contrecoeur. So if you look at the right-hand side of the screen, in Montreal, they're investing in the Contrecoeur terminal in Montreal, which again is building out and expanding the size of an existing cargo terminal just outside of Montreal to allow for higher volumes of cargo to go in and out of Canada. So with that, I'm now going to turn it over to my friend Al Dewar, who is going to take us through some of the challenges that are actually happening at the border. That's what Al does for a living. Al's one of the most renowned customs brokers in Canada. And with that, over to you, Al.
Well, thanks, Joy, for the introduction. And for those that got a picture of that first slide of terrified, that's the world that I think most brokers maybe look at themselves when they look in the mirror right now. You know, in the next slide, Joy did a great job covering the big picture, and there's gonna be some things I'm gonna say that are redundant, but the brokers, Canada's brokers, we're on the front lines. And what's life like on the front lines? It's not pretty. It's nice to know that people know what a broker does right now. We're certainly in the limelight. The word tariff is something that has been used so often in this past year that most people know what it is. But I guess when we think of it, I believe, as a tariff, we think of it as a classification number, something that assigns a characteristic of a particular good or product that will often carry a duty rate to protect the domestic industry, to generate revenue, or, and currently right now you're seeing it as part of retaliation and trade negotiations, as Joy had mentioned earlier, where particularly goods that are sectoral or protected in nature, they're going to have a higher duty rate. And then there's other duty rates that might just apply based on the origin of the good. And what what is most important is the importer, whoever that importer of record is, they're accountable. And they're accountable not just at time of entry, they're accountable after entry and for many years after that. So as to how a product is classified or what duty might be applied or what end use might be applied, there's a liability that's attached to that. So when a broker is acting on behalf of an importer, they really need to have all of the information. And because we know that Canada and US customs are going to be able to really scrape things and look at things from an AI standpoint. Next slide, please. The interesting thing about tariffs, you'd like to think that a tariff classification applies to a good and that it's universal. It should be universal across the however many countries in the world. And generally speaking, that's correct. But I'll often reference the fact that a tariff can be as much an art as it is a science. And what do I mean when I say that? You see in this particular slide, you see a ratchet strap in the top corner. Well, in Canada, we feel a ratchet strap should be uh, a hand tool. In the United States, they feel a ratchet strap is a machine because it's got a gearing type mechanism. And you better be looking at how each country classifies it, not relying exclusively on AI, because if you type in into AI or Chat GPT and you say what should a ratchet strap be classified as, it'll say it's classified by material. So classification could be as much art as it is a science. And you also see a goalie glove up in this particular image. Well, ironically, and when I think about Canada, our national sport is hockey or lacrosse. Well, the only tariff classification um, interpretation that had to go to the Supreme Court of Canada, so that's going up 5 levels of appeal, was that of a goalie glove. So different people can look at things differently. It's important to be aware of how tariffs are assessed because when either government winds up doing audits, it's the importer that's going to be accountable. Next slide, please. So you heard Joy made reference to the fact that tariffs are here. Currently, IEPA is the big one that's being looked at. But the US government has many other ways to assign tariffs, and I'm not going to get into a lot of detail on this particular slide or the options or what may or may not happen, other than the fact that tariffs are here and we believe they're here to stay. So it's important to, again, as I've said before, prove your work and have that background information because the importer is the one that's left paying the bill. Next slide, please. Um, we can probably skip over this. We already talked a little bit about the sectoral slide. So what are the frontline impacts? What have we seen being a custom broker? We've seen many people decide that they are confused, as are we. They've seen many people decide that, you know what, they're just not going to act as the importer anymore. In Canada, we're often seeing Canadian manufacturers act as the importer to bring product into Canada. And then in order to deliver a product on a duty paid basis into the United States, they would act as an importer as well. So when tariffs were being applied, Canadian importers were facing tariffs coming into Canada as well as facing tariffs going into the United States. And so many of them have just said, I don't want to do that anymore. We've seen people start looking for things before, like deductions. Hi, I don't have to pay duty on freight, so let me make sure that I'm getting that particular deduction assessed out properly. We've seen people before say, most of the tariffs or many of the tariff classifications just had a duty-free rate, but now you have to have, in order to have duty-free, unless you have one of those sectoral tariffs that might hit you, as Joy referenced, the 25 or 50%, you you better make sure that your CUSMA or USMCA certification is in place so you can have it be duty free, or the importer of record, whoever that is, into the United States can have it duty free. What used to be eligible for duty drawback might not be eligible anymore. It just really speaks to the fact that every importer should have a very good relationship with a party like a KPMG or their custom broker or another type of trade consultant to because trade is uncertain. It's best to it takes a village to raise a child, and you should find a trade village. Next slide, please. So I talked a little bit about free trade. In order to benefit from free trade, there's two primary mechanisms. I'm going to generalize here. One is if you change the characteristic of a product in a country and it happens to have the appropriate rule that that's acceptable, you can claim the USMCA or CUSMA, however you want to say it. And the other is if you've changed through the cost of manufacture, the cost of goods is from a regional value content. Every tariff classification has its own rule of origin. So you really have to sweat the details in that as well. Next slide, please. But just because you met the rule of origin, if you're dealing with something that does have aluminum or steel in it, and if that aluminum or steel isn't smelt and cast in the United States or melt and poured in the United States where you can prove that, the derivatives going into the United States are subject to that 50% that Joy had alluded to before. And what the heck is a derivative? A derivative is the steel or aluminum component and all of that you've went into making processing the steel and aluminum, like, or again you're having to prove your work. It's not just the cost of the steel and aluminum when you originally bought it, it's all of the processing that goes into that. So if you have a finished product going into the United States that has steel and aluminum as well as a bunch of other things that are attached to that, you want to make sure you're only paying the 50% on the steel and aluminum portion, that the rest of your product, which would be eligible for a free trade agreement, could be claimed free. The interesting thing about this slide is I'm talking about just the United States, what's going into the United States right now, and certain named tariff classifications that the US has identified. But what Canada just announced on Friday was they're also applying for certain tariff classifications having to do with steel and aluminum. They're applying a surtax as well. They call them surtaxes in Canada instead of tariffs into the United States, and they're applying a flat rate on the whole value of the product. So I jokingly said to my wife earlier that we bought some furniture from Wayfair. Thankfully, we've just got it. It's got a little bit of metal at the bottom of it, and furniture is one of the areas that is touched upon. Well, if you've got wood legs, you wouldn't have any issue. But if I was to buy the same furniture from Wayfair and it would be coming up after December 26th, because that's when this comes into play, I would have to pay, or Wayfair would have to pay, some 25% tariff on what was previously free or a much lesser duty rate. So there is a lot of confusion. It's changing by the day. I didn't even share the Friday slide because it just came out Friday, and the customs notices that provide support as to how to interpret that, they haven't even been published yet. And yet this takes effect on December 26th. Next slide, please. So what did I mean earlier when I said if a tariff classification is qualified for, and how does that relate to the derivative tariff classifications? One of my favorite examples happens to be roller skates and ice skates. So in the case of a roller skate has an aluminum piece at the bottom. Well, the roller skate, and you look at the tariff classification, 950670, it's kind of the same number, but it's 7020 if you happen to be dealing with a roller skate. If you have aluminum that's non-USA origin, that aluminum portion will attract the 50% duty rate. Yet ice skates, which happen to use steel, and steel and aluminum, those are the two big derivatives being looked at. Ice skates aren't mentioned as part of one of the classifications to attract derivatives or derivative duty. So an ice skate made in Canada could enter into the United States duty free. I don't understand that. Why would one skate attract 50% and another skate not attract anything based, but it's just how the US government has currently tagged tariff classifications and which one would attract the derivative and which one would not attract the derivative. And so if I was an ice skate manufacturer, I wouldn't be telling a lot of people about it because that might give the US government some ideas. You see on this other side, you see the lamp post as to the fact that previously lamps that were made in Canada would go into the United States duty free, and now you think about how much aluminum or steel that goes into a lamp post with a light on, and all of those are now attracting a foreign derivative duty rate of 50%. It's a significant factor when you have contracts and when you have um, past dealings with businesses that you were selling into the United States. Next slide, please. So how bad is it? My boss, he sent a couple of water bottles to try to test what the value might be if somebody were to send a product to the United States. He sent two water bottles down to our US office, and we got a bill of $78.80. I understand there's going to be a prize at the end of this particular session. So I hope if there is an American that wins the prize, they're not going to be surprised. Next slide, please. What declarations look like, and it showed a little bit on the earlier slide as well, before what was one line for a water bottle, now you would see some 6, 7 lines of how a declaration is taking place on each import that's going into the United States. It's one of the reasons that trade has got much more costly and is taking much more time. So the front lines of brokers working with importers and importers working with brokers has become incredibly challenging. If you look at all of these lines, what makes it even more challenging is CBP. They use a system called ACE, and ACE doesn't have the ability to validate that how brokers have made those representations on your behalf are accurate. The sequencing of the numbers, they have no ways to validate the sequencing of the numbers. At this time, it's expected that their business systems will be up to speed in February or March of next year, and then they're going to be running those and reviewing those types of numbers and declarations the brokers have done on your behalf. Let's hope you're dealing with one that's got their act together, because if not, it's you that's going to be accountable for any misrepresentation or misnumbering of the sequencing. Even if the duty is paid correctly or and surtax is paid correctly, penalties exist if the numbering is wrong. Next slide, please. So I just spoke, and you can look at this slide at a later date, but this speaks to the types of showing your work for what is necessary from a derivative standpoint. Um, what was the valuation that was used that went into declaring the steel? What was the production cost breakdown? People that are dealing with anything like aluminum, steel, copper, they feel like they're practically having to rate the bill of materials, having to do from a tariff classification and value standpoint. It's a crazy time in the industry. Next slide, please. Fortunately, the US government, they do a great job of showing, and Joy had a slide very similar to this as to where and which surtaxes apply and when. But as Joy also made reference to, it's changing at any given time. So her slide may be more accurate and up to date than the one I picked. Next slide, please. So, biggest takeaway is wherever possible, well, first off, always get the tariff right and prove your work, but wherever possible, you should try to make sure that you're claiming a free trade arrangement with Canada and the United States. There are limitations, as we talked about, as to where tariffs will apply and won't apply based on the particular sectoral areas being protected. And we've seen, as has the government seen, that previously there was very little USMCA that needed to be claimed, and now virtually everything is being claimed USMCA. So the government is really upping their game in auditing to make sure that importers or suppliers didn't just change the declaration to call it free trade on a whim, and there's actually proof that goes behind it. Next slide, please. So strategic use, always use the USMCA, make sure your classification is right, but not only your classification, understand what your end use is, because sometimes, and Joy alluded to this as well, you can have a product that might attract a duty rate, but if it's going into an ag end use or another type of end use, that you could still get some type of relief. talk to service providers about relief opportunities that may exist, the remission orders being one of the key ones that was dialogued earlier. But if you've also imported something and exported, maybe you can recover it through a duty drawback. If you really need to know and you really need to count on your declaration being accurate, explore a ruling. You might not like what you get, but at least you've got cost certainty in a world that's so uncertain, cost certainty is important. Next slide, please. Um, I guess this really just talks about lean on more than one party. Make sure that you've got a task force in place, that you're dialoguing with trusted parties, that you're checking out webinars, keeping up to date, because the shifting sand of what's happening in trade is changing every day. Next slide, please. Risk mitigation. Most people have relied on their broker to just do everything for them for a long period of time. This is the time to step back and say, no, I want a standard operating procedure on areas of tariff classification, valuation, documentation. Um, in the case of where you're acting as an importer and you're relying on information that's been done by somebody else, get an indemnification clause or something in place, whether it be with your broker, whether it be with your supplier or a logistics partner, something along the line in that regard, because the liability extends much after the accounting. It'll sit there for 4 or 5 years. And last thing any importer would want is to get a bill for 50% of the goods that they've had shipped into Canada and the United States, aggregated over the course of 5 years based on an AI audit that's done at a later date. Next slide, please. This is shameless self-promotion. If you take a look at GHY's website, we have a tariff tracker that says what's happening, when it's happening, and why it's happening, that you can drill into to see how things have happened with trade and tariffs. And we also outreach to each of our clients and say to them each time one of these changes happen, hi, here's all of your SKUs that you've imported in the last year, and this is what the impact would be if you continue to import it the next year. That's all we can do. We can share with you what has happened. We can share how it might relate to you. Then it's really up to the importer to deal with whether you be a customer of ours or a customer of somebody else's to say, how can we work together? It's just kind of like I can go to my doctor. Doctor says, hey, Al, you better take better care of yourself. Here's what I recommend. But if I don't do anything at that point, it's on me because I'm the importer and it is my health that's at stake here. Last slide, and I think I'm done. Uh, And I apologize for rifling through so many slides, but somebody told me the person with the most amount of slides might win, so I hope I won something.
Thank you, Al. And I mean, if I can just jump in there for a second, I have to echo what Al said and really stress the point that at this, I said earlier, I've been doing international trade for 40 years. International trade has always been complex. The rules have always been tough slogging when reading them and truly understanding what they meant. What's happening right now is unprecedented. I strongly encourage you to treat your customs broker and your other service providers as key members of your management team and call them to the table and have them included and in your conversations when you're making company decisions, because the rules around this stuff are, to Al's point, are changing so quickly and they're so complex. You need to have two things: somebody within your company that's actually responsible for this stuff. Because, as Al said, for years and years and years, companies relied upon customs brokers and they just paid the invoice that the broker sent at the end of the month and nobody really looked at it because they figured that's the broker's job to do the clearances at the border. And that is their job. However, the broker is only as good as the information you give them. They are your business partner. Call them to the table, invite them into your decision-making process. In my view, it's a risk mitigation strategy. But now I'd like to turn it over to Cathy Campbell, who's actually going to walk us through what a company that she's familiar with is actually doing. So this is a real life story of what's happening. Cathy, over to you.
Thank you, Joy. Just a couple of slides, sort of exactly what Al said, maybe some shameless promotion, but these are really for context into what I'm going to be talking about as we move through. So RDC, Responsible Distribution Canada, represents the chemical supply chain in Canada. And so we've got, manufacturers included in there. We've got other kinds of suppliers of services as well. And of course, our distributors. So our industry started out with basically industrial chemicals, and today many of our members are diversified because of market trends and needs along the way that have changed since as we started in the 80s. The members, when they diversified, a lot of it was because of something, and it started with the oil and gas slowing down out west. Not the most recent. This is going back again over the years, over 40 years. And then, of course, during COVID, many of our members retrofitted their businesses and they started manufacturing disinfectants and hand sanitizers so we could have Canadian-made goods in that when COVID was happening. RDC, and if you don't mind, please, next slide, please. RDC is positioned very well for Canadians as we are literally coast to coast to coast with approximately 200 sites right across the country. And our members are users of the ports, the railways, and mostly very, very heavy on the road transportation. And we make about 700,000 shipments a year or 2,700 per day at those different sites across the country. RDC's members, and this is what sets us aside from a lot of other trade associations, is that we are regulated by really every single government agency, federally, provincially, and in some cases even municipal. The only thing that we're not engaged in is nuclear, and I even hate saying it because as soon as you say it, somebody might end up getting into that business. But for RDC's members, and to Joy's point about, kind of bringing it down a little bit more to the floor, and for the small to medium sized enterprises, red tape reduction will have the biggest impact for our members, even more so than the budget, just by the nature of the business. Definitely, Budget 25 will bring more opportunities for companies as Canada is again opening its doors to business, which is a great thing in all the way across the board. Historically, many of our larger members that are multinationals couldn't even get funding for projects here in Canada due to the onerous regulatory landscape that we have. And they were opting for smaller, cheaper US locations because of other reasons, not just regulatory, but the cost of labor here and the tax regime. And I'll get into a little bit more about that in a few minutes. The budget, of course, will provide opportunities for distributors who are engaged in construction, mining, all road and public infrastructure that the government's going to be putting in place because we're in all of those markets. And we're waiting to hear more on the funding application process. On a recent call with a person from the Opportunity Office, it's still not clear on how that's going to work for business to take advantage of all of those great opportunities that Joy mentioned earlier when she was talking with some of the funds and what BDC is going to be doing, etc. To be honest, this is not any surprise. The tariffs have hurt all business and the industries in every country. It's caused more fear and more uncertainty, which we really do not need. There's a more optimistic environment, though, now that this government has made it clear that Canada is open for business, and the old saying that we'll find a way is back, and that's a real positive for Canadian business. While trade continues to happen, Canada still needs to find a solution to the labor disruptions at the ports and the railways that have stymied the Canadian economy and given Canada a reputation of being an unreliable trading partner. With RDC's Canadian locations where major nation building projects are going to be happening, we will require more warehousing and more logistics capabilities all across the country, and of course, rail access to get to some of these places like Churchill. Eliminating, and I know somebody asked a question in the Q&A about provincial barriers, and eliminating the interprovincial barriers is great news. For Canada, that's outstanding. And to me, that's already a big win, especially for the companies that might have multi-sites across the country. Many provinces have already put their agreements in place, and that's a really great starting point. Okay, let's talk budget specifically now. And thank you, Joy, for mentioning the different chapters. And I'm just going to mention the few that will really have an impact on RDC's members. So, Chapter 1, Building a Stronger Canadian Economy. The accelerated investment incentive and the immediate expensing for manufacturing and processing, along with the accelerated capital allowance for LNG projects, is terrific news. Scientific research and experimental development, or SR&ED. The admin process promises that permits and approvals will come out 3 months earlier than they have in the past, and that is great news all the way around the board. And then, of course, the ports and infrastructure improvements in transportation and public roadways and bridges will have a great impact and improve the movement of people and goods. Under labor in that chapter, I think most of us are aware now that non-compete agreements are pretty much a thing of the past. And as I mentioned a few minutes ago, we still have really deep concerns about the rail disruptions at our entry points in this country. Chapter 2, Shifting from Reliance to Resilience. The BDC has been given a new and improved role moving forward. There will be more opportunities for procurement with innovation science and economic development, given the authority to help more small to medium-sized enterprises. Again, more good news there. The Trade Diversification Corridors Fund will now also support trade and transportation. And to Al's point and yours earlier too, Joy, about supporting export tools and import tools to make things as easy as possible. We're going to see some help, I believe, for trade credit insurance, export guarantees, foreign exchange guarantees, which I think will be really outstanding. And of course, the strategy will benefit small to medium-sized enterprises. Chapter 4, Protecting Canada's Sovereignty and Security. The strategy to remove duplication and red tape for industry to work with the Department of National Defense for our members is really good news. And it's good news for Canadians to know that we're working towards a safer and more secure environment. Improvements to the CBSA. Hopefully they'll start with CARM at a minimum, which has not been effective for trucking at the borders. In fact, it's been an absolute mess. So Chapter 5, Creating a More Efficient and Effective Government. This is music to my ears after 30 years in the industry, and with the amount of duplication and regulation that we have at all levels is really outrageous. And of course, if they're going to reduce some of those things, then they have to make money somewhere else. So we're going to see penalties and fines increased. And the best way around that is to make sure you get it right from the get-go. My favorite, less duplication, use the best placed regulation or act would be a great starting point. So in closing, I would just like to say that if we can fix the regulatory environment, truly reduce red tape, use the best technology that's available, provide investment funding, negotiate a fair CUSMA for the good of all of North America, and implement the tax incentives, then we'll definitely be on the path from reliance to resilience. Thank you.
Thank you, Cathy.
I just like to make a point. Cathy was the one that used the word CARM. I went through the whole presentation and didn't use it once. So that was Cathy that said it.
And well, actually, I mean, I've got a question about that I would just be curious to get your thoughts on, Al. I mean, the mechanics of the border. So we've talked about all the legislative and regulatory things that are happening, how tariff rates are changing all over the place. How is the border infrastructure, like the mechanics of the border, how is that holding up? Is that also becoming more convoluted? Like we all know, for those of us who are Canadians and who deal with international trade, I think it's a not a very well kept secret that there are issues with CARM. But overall, like how is the infrastructure of the border holding up? Because this is unprecedented chaos.
Yeah, it's practically there's a daily disruption, Joy,
Mm.
in that they're unable to keep up with the volume. But this is a peak period, right? Based on the time of year. But it is very frustrating to know that that CLVS, the courier program, goods release freely, and that's like 90% of the volume that's coming into Canada. Well, business that's bringing in 10% of the volume that's coming into Canada, they're having disruptions because the systems are unable to keep up, and they're having to go through, full and complete declarations that the Canadian government has studied to say, well, it takes twice the work, twice the cost, twice all of that for businesses that are working in that environment. It is these particular 2 months are a very problematic and challenging time. Other than that, the infrastructure seems to be reasonably stable, and it's just a matter of the fact that it's confusing and problematic. When I think about CARM, like people want to run businesses. They don't want to have to go into and try to understand the portal. The portal right now, and I'll just one more thing in regards to it, because this just blows my mind in that, okay, it's bad enough that you have to have post security for GST. You don't have to do that domestically, but you have to do it for an import. But the government has done a recalculation of what the security should be. If you look at your dashboard and what it needs to be as of January 15th, if you look at your dashboard, it's wrong. That's not the right number. The right number is you have to go to notifications. You have to drill down to see what the calculation was. Then you have to read what that is to see what your actual security needs to be on January 15th. Maybe you're entitled to a refund. Maybe you need to post security for millions of dollars more. But who's doing that? And it's very problematic, but trade is flowing, and but it's slower for businesses that are doing lots of shipments versus the couriers. So I was a little bit
No,
soapbox that I better get off.
no, but I think your points are all really well made. I mean, I think what's happening today is more like three-dimensional chess. You heard Cathy run through a bunch of different programs that are available, not just for the chemical industry, but for example, the write-offs, the ability to write off the expenses for new equipment and machinery and stuff, all those kinds of income tax provisions that are now there trying to assist Canadian companies. You've got different programs to help Canadians diversify their trade internationally. Then you have the actual chaos of what's happening at the border. That these tariffs and the various, if you're on the Canadian side, the various orders in council that come down, you have to drink strong coffee and read them slowly to make sure that you're actually understanding them properly. And it's the same thing on the US side. And thankfully, the pace at which these things are dropping has slowed down. But realistically, compared to my 40 years in trade, this is still unprecedented. The number of order and councils that are falling in Canada and the number of executive orders that are coming down, it's just crazy.
Well,
So,
Joy, you look at Kate, we're in I'm sure you're the same as I am. I buy stuff online. I buy a lot of stuff
oh,
online.
all the time. Yep.
So it comes to my house, and if that is an import, that's exempt from the surtax that was just communicated on Friday. But yet, if I'm a business and I'm buying it to supply or work and stimulate the economy, I'm subject to those surtaxes.
Yeah.
It's unbelievable.
Yeah, I think you're right. And I think at this point in time, I mean, if we think about it, this level of trade uncertainty and the first tariff really only dropped on March 4th, 2025. I know for a lot of us, it seems like it's been a lot longer than that. But if you think about it, it's less than a year. And I think governments right now around the world, including Canada, are sort of struggling to keep up with what the new reality should look like. What should programs look like relative to everything from income tax to tariffs that are being charged at the border to stimulate their own economy, no matter which country you're in around the world. Everybody's now looking to say, in this new reality, what do I need to do to keep my country, if you're a government, properly stimulated and keep the economy flowing? And I think there's things that are happening that are creating permanent change. One question that I'm asked all the time, will the tariffs go away after the next US presidential election, like in 2028? And my answer to that is no, I don't personally think so. And here's why I think that. And then we're going to get to our prize draw. In the United States, Democrats have never been free traders. If you look back over history, they are not traditionally free traders. The Republicans, starting with Ronald Reagan forward, have been very much the Republican Party was very much in favor of free trade agreements. And under various Republican presidents, a number of international free trade agreements with the United States were signed. That flipped now with this current US administration. And if the Republican Party is no longer a party of free trade, that means neither party believes in zero tariffs. So, in my mind, it doesn't really matter who wins the next US presidential election. The tariffs, I think, being zero, are not going to happen again for a very long time. You could have specific instances for specific industry sectors and whatever where it could be zero. That's not what I'm saying, but I'm talking about what we've grown used to in North America as, zero pretty much being the standard number, the base, and paying duty was something that was more rare, and no duty was the norm. Those days are gone, in my view. And I would love to be proven wrong. I hope I'm wrong. I would, celebrate if I was wrong. I don't say that often, but let's pray that Joy's wrong. But now let's get to our prize draw. So very happy to say, we're very close to the holiday season, and we just thought it would be a good thing to give out prizes today. In order to win a prize, you actually have to be on the webcast, so don't dial off yet. You have to be tuned in to get the prize. There are 3 prizes, and I'd like to thank GHY International and Responsible Distribution Canada for contributing a prize, and KPMG, my employer, thank you for putting a prize down on the table. Responsible Distribution Canada has that lovely Stanley mug, GHY, lovely bag, and KPMG, that's a wireless speaker, Bluetooth speaker. So
the official auditors will be KPMG for this draw?
the official auditors will be KPMG for the draw. So now that you've seen the prizes, prize number 1 is RDC's prize, number 2, GHY's, and number 3, KPMG Canada. I'm going to stop sharing the slides now. And I'm going to go, I'm going to go here and share another screen. So what this is a random number picker. Rebecca, we had what, 161? Somebody
161, yep.
161 people registered for this webinar, and we have 3 prizes to give away. 3 prizes to give away. And this particular website, I'm going to click Get Random Numbers. It's going to choose 3 numbers, and Rebecca's going to look at the Excel spreadsheet with everybody's name on it. The names are not in alphabetical order. They're in the order in which you registered for the webcast. So I'm going to click Get Random Numbers, and the system will pick 3 numbers, and Rebecca will tell us, as per the line numbers on the Excel spreadsheet, who our winners are. So our 3 numbers are 53, 30, and 31.
Okay, so I have David Thompson for number 1. And for 30, I have Sarah Hopkins. And for 31, Charles Edwards.
Okay, so are they on the line at the moment?
Let's see, David Thompson.
If you are on the line, put your hand up if you heard your name called. Or put something in the chat.
I'm looking to see. To Sarah Hopkins. don't see. Okay. Some people show up as not their name, but I don't see those names showing
Okay,
up.
so I'm going to pick another random three,
Okay.
118, 142, and 107.
Okay.
Read out those names, and if you hear your name called, please put something in the chat to say, yep, I'm here. If not, what we'll do is we'll end the webcast we're right at time right now. We'll end the webcast. You have my solemn word. KPMG is the official auditor of this raffle. We will keep picking numbers until we can see by the software who was here right to the end. So
Yeah.
if you can read out the three names here, Rebecca, 118.
Yeah, I have Andrew Dang as number 1. I have Anne Agdenseth as number 2. And number 3, I have Michelle Foster.
So if you heard your
Andrew's
name
definitely on. Michelle is definitely on. I didn't see the second one.
Anne. She may just be as Anne, if
Oh,
that's her. Yes.
okay.
So we have our three winners.
Yes.
All right.
Yep.
So now what will happen is we're going to reach out to you via email and to get a mailing address from you. And then each one, RDC, GHY International, and KPMG will independently mail you or send you your prize. And with that, I'd like to thank you all for tuning in. Thank you for supporting CILTNA in North America. And if you have any questions, please never hesitate to reach out. Both Cathy and myself are actively involved in CILTNA, and we welcome member and any kind of interaction with anybody who has questions. So thank you, everyone. Have a happy holidays. All the best for the new year. And thank you for tuning in today.